Welcome back to another monthly portfolio update. In this video, I want to walk you through everything that happened in my P2P lending portfolio over the past month. As always, this is no investment advice. P2P lending is risky, and if you don't do your research and monitor the latest developments, you may lose your money. In the right column of the table, you can see how each position changed over the last month. This month, the portfolio grew by about 2.6% to just over 163,000 euro, and it generated roughly 1,223 euro in net interest. That interest figure is actually lower than last month, and I will explain exactly why that is the case. The biggest move this month was on the deposit side. I made a sizable deposit into PeerBerry. On the withdrawal side, I reduced my position on Crowdpear as loans got repaid, and I did not have time to redeploy my capital yet. I'm also actively selling what's left on EstateGuru to continue my exit from the platform. PeerBerry remains the largest position in my portfolio, and after this month's deposit, it now sits at around 36% of the whole loan book. I added 5,000 euro of fresh capital here, which took it from about 53k up to 58k, and it generated 486 euro in interest. My exposure on the platform is concentrated mostly in Poland, Spain, and the Philippines. Most of the portfolio is current, while the South African short-term loans are slightly delayed. About 3,300 euro of my PeerBerry balance is currently late, which is close to 6% of the position. That's within the range what I expect for these type of loans, and the buyback guarantee is doing its job, so I'm not worried about it. But I do want to be honest with you about the concentration. When one platform is more than a third of your portfolio, that platform's risk becomes your portfolio risk, and that's something I recheck every single month rather than setting and forgetting. PeerBerry is micro position, so regular monitoring is even more important here. As an investor, you should know that on PeerBerry, you are mostly funding fintech startups in their growth phase, meaning most of the lender's financials on their own are not yet attractive enough to justify funding. The reason why I treat PeerBerry as a core holding is my 8 years of experience with the platform. The company follows the highest standard in investor protection I've seen in the industry, and most importantly, they offer reliable buyback and group guarantee, which is a real safety net should things go sideways. EstateGuru is once again the platform that looks the most negative this month, but only because of my actions on the secondary market. It shows a loss of about 232 euro. That's the realized cost of continuing selling my defaulted loans on the secondary market so I can get out. The remaining position of roughly 4,000 euro is entirely in default. Everything that's left on EstateGuru is basically a recovery play. So the goal is to free up the capital as soon as possible and put it to work on platforms that are actually paying interest rather than letting it sit and waiting for years on the recovery process, which, as many of you know, is rather underwhelming. Triple Dragon funding is quietly my second largest position now at around 21,200 euro. I did not add any new money this month. The small increase you see is simply the interest reinvesting and compounding. Everything is current. It's basically all secured commercial lending across Canada and the UK at 14%, and it continues to be one of the smoothest performers I hold. There is nothing unusual to report, which is exactly what I want from a higher yielding platform. By the way, TD Funding still runs its cashback promo for anyone interested in increasing their position on the platform. Finta was flat this month at just under 17,000 euro, and it earned 172 euro in interest. This is a rather mature position of rental projects in the Czech Republic, generating a monthly cash flow. There is nothing concerning to report. However, investors are still waiting for the 2025 annual reports, which have not yet been published. Crowdpear came down this month from about 10.8k to 9.6k euro as loans got repaid, and I did not have the opportunity yet to redeploy the capital, as I am too picky in investing my funds here. It earned 98 euro, and almost everything on the platform is current and secured. Lande is the platform I want to look at most closely this month. The balance came down slightly to around 12,500 euro, and it earned 129 euro in interest. But what's more interesting for me is the quality of the portfolio. Roughly 2,600 euro of my Lande position is currently late, and about 431 euro is in default. This is secured agricultural lending, so as long as the loans are properly secured, I'm not too worried. So far, at least in my experience, all of my defaulted loans got recovered at some point, but I am aware that some of the investors have reported very long recovery timelines, which can, of course, be quite frustrating. So this is definitely something to consider. Currently, my strategy here is to wait and see how the new expected liquidity product will look and potentially shift my portfolio into it rather than invest in loans individually. Indema was flat this month at around 12,400 euro, all of it sitting in Spanish discounted debts with an expected yield of 15%. It earned 43 euro in June as one debt in my portfolio was repaid. This particular investment generated 17.36% in weighted annual return. Investing in discounted debts is pretty unique by its nature because the returns arrive when the underlying recoveries come through, so uneven interest from one month to the next is exactly what I expect here. If you decide to use Indemo's regular cashback promos to increase your holding, make sure you understand the business behind it. My position on income earned nothing this month and the balance did not move. This is now a very small position for me. As of right now, I have not decided whether I will deploy more funds here and how it would benefit my allocation based on the risk profile of the currently listed lenders. Afranga grew modestly to just under 17,000 euro and earned 194 euro, which makes it one of my stronger income contributors this month. It's all current, it's unsecured Bulgarian consumer and commercial lending, and a good chunk of it sits at 16%. Afranga is still listing those high-yielding long-term loans, however, I'm not increasing my position as I'm already taking a 10% exposure to stick credit, whose impairments grew faster than revenue last year, something I keep a close eye on. If you decide to expose yourself here, make sure you understand that those high yields are offered only for a 3-year period with no option to sell before the end of the long term. Nectar crossed the 10,000 euro mark this month and earned 87 euro. Just like with Triple Dragon funding, that growth is simply the interest reinvesting rather than any new capital going in. It's all current Romanian installment loans at 12.5% and it is performing as expected. The total size of this P2P portfolio is just over 163,000 euro, which is up about 4.3k or roughly 2.6%. Net earnings came in at 1,223 euro, which is down about 12.5% from last month. This is how my platform allocation looks like. Around 40% of the portfolio sits with PeerBerry and Crowdpear, which I consider a core position, followed by a higher yielding platform such as TD Funding, Afranga and Nectaro, which represent about 30% of the portfolio. The rest are platforms with more niche loan types. If you are new to P2P lending and are wondering in which platforms to invest right now, we have a dedicated P2P allocator on our website, which will help you to better understand certain strategies based on your risk appetite and time to monitor the platforms. My portfolio is spread across various countries and jurisdictions. A big portion is allocated to Poland, Spain, Bulgaria and the Czech Republic, as well as the UK. I'm also slowly growing my position in Canada and Australia. Most of the loans are commercial loans, followed by real estate-backed loans and rental projects. In terms of loan health, around 93.5% of the portfolio is current, with the rest sitting in late or default. About 62% of the portfolio is unsecured but backed by a buyback or group guarantee. The rest is secured by mortgage or company assets. The weighted average interest rate is 11.65%, spread across 199 loans in 15 countries, with an average of about 821 euro per loan. Now, this is not a perfect or the safest portfolio. There is always risk to consider. I always evaluate new developments on the platforms I invest in, be it newly disclosed financials, regulatory changes, or new product offerings. Will I always be able to spot all the risks? No, but being aware of which risks can materialize on which platform is something I recommend everyone to educate themselves on. Ignoring risks just due to high yields or high cashback offers is not a strategy worth pursuing. You can learn about risks by reading our reviews on P2P Empire, including the risk scores and red flag sections. You can also download our due diligence checklist, which will help you avoid 95% of the platform defaults in recent years. The ugly truth is that if you decide not to monitor or research anything, you will pay for it sooner or later, as we have just recently seen with Ventus Energy investors. If this update was useful to you, hit the like button and subscribe because I do this every single month. Thanks for watching. I will catch you in the next video.